Hey, what's up, everybody? It's Brandon and Michael with RIL Talk, Real Talk. Hey, Michael, how's it going today?
I'm doing pretty well, brother. I am. That's not a green screen behind me.
It's not?
You
Wow.
got the that's the Obbit family wagon out there, and there's my vehicle with a kayak on top. I don't know. I'm in my little screen shelter, my mobile my mobile office. I
Got
don't
your
know if you can see.
anti-mosquito office?
Yeah, you know what? It's not so bad mosquito wise right now. I'm up in your closer to your neck of the woods. I'm in Georgia, but I'm up in Jekyll Island.
Okay.
Um, but
Little retreat.
yeah, so close to the beach, and but I just came from the near Cape Canaveral, literally across. So there's an intercoastal called the Indian River Lagoon, and I was right across from Kennedy Space Center, and
Oh, wow.
mosquitoes were freaking bad, and I don't know why, but I've got tasty ankles, it seems, and I literally got bit. My ankles, both ankles. That's the only place I got bit. I was around my
Man, you
ankles. I don't
that
understand
juicy
what the
white
deal
man.
is. I got
That
juicy,
juicy white
juicy
stuff.
ankles, man. I'm gonna put those things on. What's that called? I'm gonna get an OnlyFans ankle page.
Oh,
I think at least I know the mosquitoes are in.
yeah.
Um.
Gotta hope
So
they have the
yeah,
money
man.
for it.
Yeah. Well,
Put
yeah.
it through
You
the
know,
drip.
I'll probably have to pay to get viewers. So, and I'm a
Man.
little short today. I apologize. I do have a Zoom meeting in about a half an hour. So
Oh,
I've got
boy,
to
gotta
do
work, man.
yeah, man. Gotta talk about Florida mortgage continuing education.
Oh, here we
I
go.
do classes for them for the Florida Association of
Nice, yeah.
Mortgage Professionals. So
Yeah, speaking of
I've got a meeting
classes,
with
yeah,
them.
RALs are working on the getting their realtor accreditation or real estate
Florida
course.
real estate
Yeah,
continuing
PCE.
education. That's right.
Yeah, so we're
That's
working on getting that course going for realtors and
mhm.
getting that approved so we can get some people with the knowledge and everything that we're preaching. And then now, instead of them just doing it, they're going to actually get credit for it towards their license.
Exactly.
So it's a win-win for them.
Exactly.
And that's what we're here for. So yeah, are you on this? Is this like a long time trip, or is this just a quick getaway? Or are you going to hit the road,
We
man? Yeah.
we left last Wednesday. Where you know anything can happen because I left Wednesday. I was planning on going back. It was just going to be a few days. Planning on going, getting back to to the Orlando area on Sunday. And instead of going west toward Orlando, I ended up going north toward Jekyll Island, and here I am. I don't know. It just happened.
Yeah.
It just happened.
Okay.
So,
All right. All right.
but
Cool. Cool.
I can kind of work from anywhere. So you know,
Hey,
I've got
I mean that's
my three screen setup here in my screen room. I had a squirrel climbing up the side earlier, and it has this little roof up there, and he was like right in the
yeah.
middle of the roof, and I just kind of pushed him. I didn't mean to. He was a little lighter than I thought he would be, and I kind of launched him into you know onto my front entrance of the camper. So he seemed
Well, I
fine.
mean,
He seemed fine.
if you were in Louisiana area, man, that'd been lunch.
But I was just gonna say, you Georgia folks, you might eat that. I don't know.
Oh yeah. So yeah, man. I guess we're gonna talk a little bit about financing and lending opportunities today. So I want to go ahead and blast our little disclaimer. Everything we say today is for educational purposes. Do not take this as financial or investment advice. Strictly education purposes only. So yeah, today I was pulling it up earlier. I mean, at least for the mortgage rates at what 5.75, 7.5.
They're in the
7.75.
mid sevens. Yeah, you're here's the disclaimer on what mortgage rates when you find them on the internet. That's an aggregation of what multiple lenders have published as their quote unquote 30-year fixed rate mortgage or 15-year fixed rate mortgage, whether it's conventional or like a govy, like an FHA or whatever. But the problem is they're typically not doing those with a lock. That's assuming you were ready to close today. That's like today's rate, and it's with an 850 credit score, and they'll put it in like with 30% down, and you know whatever. those are not attainable, and it's not just that, oh, that person might not have this good credit, but typically people need a lock period, right? The loan is not
Yeah.
closed, not ready to close. So if someone's shopping or
Hmm.
and your lender quotes you a rate, don't believe them, because they should tell you, hey, listen, until you're under contract, there is no rate lock. I can tell you, today a 30-day lock, with 0 points is approximately this, given your specific scenario. But yeah, I mean, listen. There's my big warning is if you're getting quoted a rate
Hmm.
without an application, a credit report, and a property, you're not getting quoted a rate. Someone's feeding you a line of bullshit,
Right.
or
Yeah.
or straight up
Speaking
lying
of
to
the
you.
locks, man, there's a lot of that. Speaking of locking in, kind of on both coins of here as the lender and the investor, when it comes to getting something locked in, what's a you know I know you have your methodology of like when and where to lock it in for them.
Mhm.
You have your little system down, but
Right.
somebody, let's, I guess, on both sides, where for lender and for investor, what's kind of the thing for, let's say, in the lender side, what to look for? I know some people just say, okay, boom, contract, let's lock it in right away. Is it better for them to kind of look?
That's the.
I
I'm
mean,
going to say it like
on
this.
the
Yeah, absolutely.
yeah.
That's a fabulous question.
Okay.
So, there are times when there's so much volatility in the mortgage market that you want to take a 30-day rate lock and just lock fast. Okay.
Hmm.
But think about this for a second. In any lending scenario, the longer the lock, the higher the cost, right?
Right.
So in other words, a 30-day rate lock costs more than a 15-day rate lock. And people always say, well, rates change. Truthfully, they don't change, right? Think about this: 7.5% is always 7.5%.
Hmm.
It's never a different rate, right? What changes is your cost for that rate given your specific scenario. So Brandon might apply, he might want to buy a house, and based on his credit score, his document type, the occupancy type, the property, 7.5% costs zero. Let's just pretend. Um,
Right.
and so that means, you've heard of paying points. Paying points is buying down the rate.
Hmm.
And so that would be zero. It doesn't cost you any points for 7.5, right? Now you could pay something and lower that rate. On the corollary, or the whatever the opposite, I probably just misused that. On the opposite of Ori, because I have like three languages bumping around. I got English, Spanish, and hillbilly. So it makes it hard for me. But so the opposite side of paying points to buy down a rate, you can accept a higher rate and receive a credit. And that's where, if you've ever heard of people advertising no closing cost loans, air quotes, no closing cost loans, what that is, hey, I'm gonna, the rate, your rate would have been 7.5 at zero. I'm gonna charge you an 8% rate, and I'm gonna pay 1.5% of your closing costs with the proceeds from that rate.
Hmm.
So think of it as a continuum, right? And it can go, the rate can go up, and there's money being generated. The rate can go down, and it costs money. So in that scenario, first off, let's pretend par or zero is 7.5%, right? Let's pretend that's on a 30-day rate lock. Okay. Well, on a 15-day rate lock, 7.375. Typically, interest rates move in 0.125, an eighth of a percent,
Okay.
right? So 7.375, which is one eighth lower of the rate. Let's pretend that's par on a 15-day loan, right?
Okay.
So I could say, hey, bro, if we wait and don't lock you today, you're under contract and your contract is to close within 30 days. Okay. Um, I can say, let's do a 30-day rate lock. You're at 7.5. Or let's wait. I'm watching the market literally daily. We do that where we have. I'm going to pop something open. I don't know how well you're going to be able to see it on my Hoosier here on my big
Yeah.
monitor, right? But you come up here, right, and we're watching. Can you see any of that?
Yeah.
So we're watching these. This is mortgage-backed securities, and we're watching them move daily and we're seeing green is good, red is bad, and how the mortgage backed securities are moving. And as those are moving, you see like, hey, this improved a little bit since
Hmm.
Friday, right? And so
Okay.
we're watching that. But if you think about this lending scenario, right? I'm going to buy a house. I'm going to close in 30 days. I lock. So I've got a
Okay.
30-day rate lock and I'm supposed to close in 30 days. Perfect, right? That should be fine. And that's a lot of people do that. A lot of mortgage originators do that. What happens if, when the appraisal comes back, the appraiser says, "Hey, listen, I've done this appraisal. Here's the value. It's $5,000 lower than the sales price." Now, your realtor and the seller's realtor are all, they're going to go back and forth, right? You're going to say,
Right.
"Hey, listen, I don't want to pay a penny over the appraised value." So you have to call your realtor, right? And that didn't happen immediately. You get a phone call from, well, your realtor gets a phone call from me. Me and your realtor maybe call you. We have that conversation. You say, "Gosh, I have to talk to my significant other, my wife, whatever." You have those conversations. You come back to me and your realtor and you say, maybe it's half a day already, right? Because someone was at work or whatever. And so you come back and say, "Hey, listen, no, we're not going to pay a penny over the appraised value." So now
Hmm.
your realtor has to reach out to the listing agent.
Right.
And the listing agent's going to go, "I don't believe that. It's worth every bit." And,
Right.
there's a conversation back and forth, right? And sometimes we dispute the value, right?
Hmm.
Sometimes what does that mean? That means we get some additional comparables and we send those to the appraiser.
Hmm.
Maybe we've done that and that took a week and now we're back, right? And it does, I mean, because it does. Now we're there and back and forth. Listing agent talks to the seller. Seller says, "Well, listen, I'll agree to split the difference. So I'll lower my sales price 2,500. He's going to have to pay the difference of 2,500 out of pocket, right?" And so now you're in this negotiation back and forth.
Yeah.
What happened to our 30-day close? Think we're going to close in 30 days?
That's getting pushed out probably.
We're probably going to have an extension. So do you think that the capital markets department from the lender gives a shit? Am I allowed to say that? Cares why we didn't close in 30 days? No. There's going to be a fee for an extension, right?
Right.
And guess what? That fee is charged as, think of it almost like paying points. So now
Hmm.
you have an extension fee. So that 30 days cost you money, that 30-day rate lock, right? So the way I prefer to do it, unless it's an extremely volatile market, I prefer to wait as long as possible. Okay.
Right.
My goal, honestly, I look at it, I say, I want to get the appraisal back. And now I've
Yeah.
got the appraisal back. That's typically the big obstacle. And by the time the appraisal's back, we've gotten it through underwriting one pass at least. We've seen the conditions. My processor and I have a conversation, say, "Hey, where are we at? How's this, Brandon Lee file looking?" She's like, "Yeah, no, these are pretty routine conditions. There's nothing I'm terribly worried about." Or maybe, well, hey, the knucklehead did, we would never refer to a borrower that way. But, hey, the knucklehead did a large deposit that now we're having trouble seasoning or sourcing, or you know what I mean, like
Right.
this is going to be a fur ball, I mean, something, right? Now we know, hey, there may be a delay, so now
Yeah.
we're waiting, right? If she says, "Hey, conditions look pretty clean, appraisal's back, it's as is and value," so we know there's no, because it could be subject to, "Hey, this is
Yeah.
subject to the front porch being replaced." Again,
Right.
back and forth conversation. Seller has to get the front porch replaced if they want to move forward, and then the appraiser has to go out and reinspect. So now we're having an extension, right? So there's a number of different things. So let's assume we're as is and at value. Conditions look clean. We are 10 days from closing or 11, 12 days from closing. At that point, I'm calling Brandon and I'm going to say, "All right, bro, let's do a Zoom meeting. And I'm going
Hmm.
to show you the matrix, right? Not the
Right.
matrix, but the matrix like a grid, right? I'm going to show you the grid and
Hmm.
say, "All right, dude, we have, um, you know, 7.5, you're at par. 0 and 0 doesn't cost you anything, don't receive anything. 7.625, you're getting, $3,000 towards your closing costs. 7.375, it costs you $3,000, and it's never that simple. But we're that. Hey, look, this is the difference in the payment. This is how long it is for you to break even, and then we make a
Right.
decision together based on your recommendations. So that's I prefer to do. Um, I see people all the time. I hear it from mortgage people all the time that say, "Oh, as soon as you're under contract, as soon as the loan is submitted, lock." Lock before you submit. Lock it. Just lock it. It costs the borrower more money. And then I've heard
Yeah, I
people
mean
say, well,
that's not
lock. If they're
perfect.
okay with the rate, if they're okay with it, just do it. Just lock. Like, for me, I don't know. I look at if I could save that person some money and educate them about what are the costs and what's the break even, it might make more sense to float for a minute,
Yeah.
It just
To me,
depends.
it sounds more logical to be, 2 weeks out, like you're saying, where you know it's like, hey, everything's good, finances are straight. We've already had that conversation with the lender. All right, now it's time to lock in and get the paperwork finalized versus lock in now, start the whole process. So, I mean, that seems just more logical to me. And like you said, if you're already touching base with the lender and everything's looking good, you're just waiting to get that the ink on the paper. Why not? You know, might
I
be a
mean,
little bit better
there's a
rate.
pro and a con, and I can tell you there were periods of time when rates were very volatile, and you need a lock.
Right.
Or wow, hey, listen, on Thursday, there's an inflation report coming out, but I'm going to have that conversation up front, and I'm going to say, Mr. Borrower, here's where we are right now. Here's what this means. Now on Thursday, when that rate, I'm sorry, when that inflation report comes out, we may see marked improvement in pricing on Friday,
Hmm.
or we may have a freaking disaster on Friday. We don't know. And once you
Right.
lock, that's your rate. Well, what happens is
Yeah.
it puts you into the band of that day's pricing. So
Right.
if you lock at 7.5 on
Hmm.
Wednesday and on Thursday, there's an exceptional news. Friday rates are significantly improved or pricing is significantly improved. You're stuck on Wednesday's prices. That's it. You
Yeah.
can, there's
Right.
there's no, unless you cancel the loan and resubmit and start over, that's where you're at. So it's, we try to make educated, recommendations.
Yeah, I mean that's what I've seen a lot of people, heard a lot of people that after they bought a house, it's like you expect to have a conversation with them, and then they're kind of just like deer in the headlights. They have no clue about anything of the process. They're like, well, yeah, I had a mortgage broker. They did this, da 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 da, and yeah, and I got financing, and I own a house now. And it's like
They
you
have
didn't
no
learn
idea.
anything.
Yeah.
Like
And
you,
that's,
this should have been a learning process for you.
yep. And no, I have a young lady who's going to be interning with us, and I say young lady, she's actually retiring from being a high school
Hmm.
teacher. And she just got her mortgage license in Florida. Approached me, and said, "Hey, I'd like to find out about doing an internship with you." And
Hmm.
one of the reasons I said, "Well, it's weird, right? Are you like a math teacher?" She's like, "No, English." I'm like, what does that have to do with, where did your interest in mortgages come from? And she said, I wanted a career where I could be mobile. And obviously,
Right.
as you know, we can be mobile, right? She
Yeah.
said, I want a career where I could be mobile. And I want to be able to help people. And she said, when I bought my house, and she's like, I bought
Hmm.
two houses in my life, and she said, when I bought my house, my last house, they didn't tell me anything. She's like, they literally just sort of said, here, sign here, sign here, sign here.
Hmm.
And then I went back and I was like, okay, but what is this? What is that? And she's like, I couldn't even get anybody to answer me. And she said, and prior to
Yeah.
that, she had purchased a home in Puerto Rico, and it's a little bit of a different process there as well. She said, you know what? I don't want people to go through what I went through. I want to actually be able to help people and teach them and help them grow, and improve their finances. Because, dude, you know what? At the end of the day, for 99% of people, unless they're like a trust fund baby, their personal residence is their biggest asset, and
Right.
their mortgage against that house is their biggest liability or their biggest debt. They should understand that. People spend so much time studying, freaking Bitcoin, and so much time looking at making. Oh, I'm going to be putting $47 a month into my 401k. Let me really analyze which stock to take or whatever. But that's never going to be their biggest asset. So that's where we come
Totally.
in and say, you know what? It makes a lot more sense to actually pursue
Yeah, I mean
your financial education.
that's that's what it takes, man. Like, because there's so many people, there's so many lenders, mortgage originators that they run through the courses, they crash through everything, and all they look at is the dollar amount. Like,
Right.
okay, well, who can I grab and throw under a contract, and make money off of?
It's
And I
transactional.
mean, it's
It's transactional.
you know, yeah.
It,
So my thing is like, well, like last year, there's a lot of licenses weren't renewed around the country,
yes.
but there's somewhat of an influx. The next batch of folks that come in, and it's like, hey, it's not all pretty rainbows, and just grab people and trying to make money off of them. You can easily, you know make a good business out of it, or you can burn yourself in the business of, you know people who don't know till after the fact, and that's what
Yeah.
happens is
Well, most
people
people, and this
close and
is
then
true. This is true of realtors. This is true of mortgage professionals. There's not a lot of people that are really good at it. We're, business is transactional. In, out,
mhm,
done, and, do the next one instead of saying, hey, let me actually provide a service and spend a little bit of time with this person and go back to them and ask them for referrals and go back to them and build a relationship. And when they need to refinance, it's not going to be the first radio ad they hear. They're gonna call me because I'm their financial resource, right? And that's the mentality
yeah,
that we try to teach. And that one of the things that I think is amazing is we have this real pros, right? And the L is lenders, and we're the consumer. We're not just here to help investors and realtors. We're here to help lenders improve their game, right? Step up their game,
yeah.
do more
In
business.
commercial, there is no, it's like in residential, home buyers, it's like, okay, bam, I got somebody, close on them. Be like, man, I'll probably never get another deal for them, so I made a big fat chunk of change. In commercial, you're going to get multiple transactions from one person a year. So if you're not on
Especially,
your
yeah,
game, you're
especially
not providing a
investors.
service,
Yep.
they're not going
Especially
to come
yeah,
back.
especially investors. But the other thing is, I would argue with something you just said. You said, hey, they met, yeah, on residential deals. Guess what? They have friends and family.
Yeah.
They have, you know, so my colleagues who don't take that big picture and don't look for the next, that relationship and don't provide that service
Hmm.
and just want to hammer out a transaction and go find the next one, they're hurting themselves.
Oh
So,
yeah, they are, man.
so yeah, really important.
Well, that's about the time we have.
I was just
It's
looking,
been a
yeah,
good talk,
my,
and we just dove into to mortgage lending. So, but yeah, we'll catch up on the next one. We'll get into some of those points that we were talking about. But yeah, Michael, stay safe out there. Don't get hopefully the mosquitoes stay low
I've got
because
a bunch
some
of
of our
squirrels. A bunch of squirrels have been eyeing me, so I'm getting a little nervous about.
yeah, man. Go make you some lunch, man.
It's
Go put something on a skewer,
Oh
man.
yeah, I got traps up already, snares and stuff, just to get that
Oh,
squirrel.
there you go. Oh yeah,
So,
man. All right, Michael. Well, I'll catch you on the next one, man. Have a safe trip out
okay,
there.
brother, take care. Bye.